What is up, ladies and gentlemen? Camilo here. Hope you're well. What an amazing day we had. SPY, Qs, SMH, IWM, Dow all closing in the green after we got Powell. All right, Powell gave us the green light, although the meeting was hawkish. His statements and his decisions were a bit hawkish, a little bit more than what the market was expecting. But there are a few articles out there. I do encourage you guys to go and take a look at the reports if you missed it this afternoon. It is important to understand why the market's ripped, okay, even though the Fed was hawkish. Now, let's take a quick look here. We'll review our wave count and what levels we're expecting to the upside. Before we dive into the analysis, subscribe to the channel, give me a thumbs up, and hit that bell icon so you'll be notified when I upload these videos. Okay, even though there is a 90% chance that this market is still going to continue on higher based on what happened today, there's still that 10% chance that we may still see that decline that we've been reviewing on our alternate bearish count. However, don't get too bearish, okay, because this rip was pretty much the tell, right? If you take a look at the daily time frame and we hide the waves, the labels here, it's an engulfing candle. All right, we're engulfing the entire move here, so it's pretty bullish to say the least. All right, so let's take a quick look at our wave counts here and what to expect coming into the following few days before the end of the year. All right, so Merry Christmas, Santa rallies here, and let's go. Now, out of the December 3rd lows, we impulsively went up into the first wave. Okay, we made our first 3-wave down to the A, 3 waves up to the B, which found the 1272 external retracement resistance of this wave A. All right, so that was pretty clear. We then received a massive sell-off in 5 subdivisions, which came in an appropriate 38 to 50% retracement of this higher degree wave 1, and between the 100 and the 1618 extension of wave A versus wave B to give us the extension of wave C. Now, as you can see here, we have 4 fib levels that are in confluence with one another, and we have massive support zones here, okay, that are letting us know that this was a clear price of interest for a lot of traders. All right, now once that's done, we are now looking at this as the impulsive structure coming out of this corrective move. Now our upside targets stand here, which is the 100% extension of wave 3. Right, sorry, 100% extension on wave 3 is measured by taking the extension of wave 1 versus wave 2, and you get 481.88. So I do anticipate this week to continue rallying and trying to reach the 100% extension. Now, to quickly dissect this wave count here, right, on the corrective move, let's dive down to the 15-minute time frame and let's take a look. All right, so from the December 8th high, we got 3 waves down to A, 1, 2, 3 to B, and then we have 1, 2. All right, 1, 2, 3, 4. We did not invalidate the count as we stayed below the wave 1, and then we got a final 5th wave. So this was valid, although today we were thinking that after obviously the initial when the day started, the session open, we had this decline. So I figured that perhaps this was a 3rd wave, wave 4, and then we get one more leg down during Powell, but it ended up going the opposite way, which is good. Now, the way I'm viewing this, guys, is that this is wave 1, wave 2, we have our 3rd wave, we may continue on higher coming into tomorrow, we get the 4th wave pullback, and then we rip to all-time highs. Back to the 1-hour time frame. All right, so it is likely that we're going to head on higher. It is likely that our next targets are going to be the 100%, which is 481.88. All right, so we first have to take out these highs here at 470.73 to continue on higher. Let's take a quick look at what our bearish interpretation is still suggesting. All right, so let me clean this up here real quick for us. So our bearish interpretation, although this wave 2 is pretty deep, okay, but we can still see 3 waves here, although it is, 1, 2, and 3, right? But let's take a retracement from the high of wave 1 to the low of wave 1. Actually, let me delete this and clean this up a bit. So this is not at all, closely to being accurate. All right, I'm still showing it because, again, there's that 10% chance that this is still something that we may consider, right? So taking a retracement for wave 2, we see that this is going beyond 100%, or at least hitting the 100% extension. So wave 2 does not pull that deep. Okay, we have, let's say if this was the A, the B, and the C. All right, let's take a look at an extension. Let's move this aside. This will even go beyond the 200, actually the 2618. All right, so it will be somewhere between the 200 and 2618. Now, I'm not favoring this at all. All right, this looks, it does not meet the guideline of the right look. Okay, there is no way that a wave 2 can go beyond the territory of the wave 1 like this. All right, so it is unlikely, but should this continue on lower tomorrow, I mean, we have to take out these highs to confirm the uptrend, right? But if we continue on lower tomorrow, if by any chance something happens overnight, then boom, and we reject these levels, then this is the likely count, the likelihood that this is the count. Not the ideal scenario, but it is still something that we should put out there. Over to the Qs, just like in the SPY, out of the December 3rd lows here, December 4th, right? Wave 1, ABC pulled back into the wave 2. The wave C of wave 2 was a little deep, more than what I like here. ABC down to the 200% extension of wave A, but it was down towards the 78.6. All right, now when I pull out this trade yesterday, I mentioned to you guys that this served as a good risk to reward example. Okay, this is why I love using Elliott wave. All right, we came near the low, okay, of the origin of wave 1, so we had a clear invalidation level. Okay, and this is my style of trading, and this is why trading with levels like this helps you understand your risks too versus the reward. Now, we got in at 385ish, 386 on the Qs, right, with shares. Now we ripped higher, but our risk was just shy of, let's take a look, just 1 or 2% on the shares that I had. I would have stopped out right at the break of the low of December the 4th, but instead we got this massive rip. We took our profits today on this rip, and the profits will be to roll it over actually into an options play for the Qs to take us on higher. All right, so essentially it's a free play for me and for the team over at Trending Waves. If you want these type of trades, join the group. The link to the Discord group is pinned down in the comment section. So from this low here, right, where can we expect the wave 3 to continue or to end? So our simple exercise is taking the extension from the low wave 1 to the high to the low here, and we will open up our 100% extension. So we should be coming towards these highs. Now, because this was a deep retracement, I anticipate the wave 3 to reach towards the 1618 at the very least, right? So anywhere between this zone is our wave 3 pullback, sorry, our wave 3 advance, and then we get our wave 4. Now, obviously, you know that wave 4 cannot go beyond the territory of wave 1. So if you are missing this trade, all right, you may want to wait for a little bit pullback here and go. But if you miss this whole advance, wait for that fourth wave retracement. Wait for it to reach towards the bottom here or near at the wave 1 for an entry opportunity for a very minimal risk to take you up to the wave 5. All right, guys. So over to the SMH, as mentioned yesterday, the wave 4 had completed here. This looks like a 78.6% retracement support of this wave 1. We are very well on our way to the wave 3 to take out this all-time high here at 318. IWM, it was fighting us. It was fighting us. So it is still likely that this is the count. Actually, no. This is not the count anymore. We'll have to rework this. Let me take a look here real quick. So I still believe that this is the AB. No, wait a minute. So AB. Right, A, B, or maybe this is still an ongoing fourth wave. So let's take a look at our other count here, because IWM is a little tricky at the moment in this count. I'll have to rework that there for you guys. But let's take a look here. Now, IWM can still see for the downside should these levels not hold. Now, down in 1, up in 2, down in 3, up in 4, the 50% retracement. And if we get this 1, 1, 2, or 1, 2, down in 3, 4, and 5 to complete this 5 wave. All right, guys. So let me work the other count on the side. If you guys want to see that full picture, join Trending Waves. Otherwise, we'll post it up to the YouTube live. The YouTube video tomorrow. Okay, guys. So IWM can still see for the downside towards the 78.6 and the 100% extension. Okay, actually, let me go back because I have I have to work this out here in front of you guys. All right, so so this expanding flat, okay, it's 1, 2, 3, and if this is should be three ways, so yeah, so A, B, and C. There you go. I knew I had it right. My apologies, guys. So A, B, and C. There you go. Let me turn these. Let me turn this to the appropriate fib level or fib wave. Sorry, the wave count here. So yeah, so A, B. We broke this low to the C wave. So maybe this is the initial or the start of the final fib. All right. Let's adjust here. Boom. There we go. We damn near invalidated the low here. Okay, so it's hanging by a thread, but this impulsive breakout here that came out of today is kind of let's see. I'm not gonna sort of foretell what's going on here because this is a little tricky still. So either way, watch out for any continuation or any breakdown below the 210.63. All right, guys. So thank you so much for your patience. I do apologize for this count here, but I believe that either or may be at play at the moment. So take good care of yourselves. See you guys tomorrow. Bye. Actually, wait, no, Dow, the Dow, we forgot about the Dow. As I previously mentioned in the Dow yesterday, we were in the wave 4 pullback, 23.6% retracement, 354, and now we are ripping on higher. That was it. All right, guys, take good care. Peace out.